Hi everyone, it's Rebecca Milliken. I work with Bank of England Mortgage. And today I just wanted to go over a quick presentation for what it's like buying your first home, how you get a mortgage, and understanding the ins and outs of the home buying process. So from soup to nuts, we're going to get into the details here. So the goal for this course is to learn the advantages of owning your own home. I'm not going to tell you that it's never a good idea to rent or pressure you to purchase a home, but we're going to learn the advantages of what it's like owning your own home. We're going to explore different loan options. We're going to discuss the costs of being a homeowner. We're going to review how your credit score affects your loan options. And we're going to review what it takes to get completely pre-approved for a home loan. And then finally, I'm going to answer any questions you may have. So let's get started. Why buy instead of rent? The advantages. So I know you've all heard of Susie Ullman. She's a financial expert. And she states that lasting net worth comes only when you have a healthy and strong sense of your own self-worth. So what I mean by this is owning a home can be a wise investment. We all hear that owning a home is one of the pillars of success because you gain equity and the value of home ownership and that pride that you get in home ownership. It helps you achieve the American dream. But it also is a very wise investment because over time, your home equity and your wealth grows through appreciation. Again, homes tend to increase in value. There was only one time in history when they went down in 2008, but over the years, if you held on to that property, it did grow. And the average appreciation we see is about 4% nationally, year over year. Also, you can build equity over time because you pay down your principal and interest. Specifically, what I'll go through today is a 30-year amortization schedule where you start paying your loan, and then in 30 years, there's no limit that the very last 360th payment is your very payment, and you own that home free and clear. Interest paid on a mortgage is typically tax deductible. I am not a tax expert, so reach out to your tax expert and ask them what is tax deductible on your taxes for your homeowner interest. So not only is it a wise investment to purchase a home, you can home and make it your own, and that pride lasts a lifetime. You can make room for a growing family. You will have a starter home. That's a great way to build personal wealth. Say you purchase a home as a primary resident, then decide, hey, this would be a great home for a renter. And then you can get income from the rental income you receive. Not only are they paying your mortgage, but you might be able to cash flow that property as well. And then lastly, stop paying someone else's mortgage. Again, this is no pressure here, but take it from Robert Kiyosaki. He is the author of Rich Dad, Poor Dad. And he states that most people fail to realize that in life, it's not how much money you make, but how much money you keep. That's what builds your wealth. All right, so how to begin? Is it as easy as 1, 2, 3? Let's take a look. Find a home team of experts. You're going to reach out to a local lender. You're going to want to reach out to a knowledgeable mortgage professional, and you're going to want to speak to a trusted homeowner's insurance agent. Then you're going to want to complete what's called a mortgage pre-approval. When you get a mortgage pre-approval, your lender, such as Bank of England Mortgage, will review your current situation and determine whether or not you can be pre-approved for a home loan. Then you take that pre-approval letter to your realtor and they submit it with your offer to purchase a home. That's your golden ticket, and make sure that your offer is valid and you're ready to go to purchase that home. Your lender is going to also ask you, in order to get this pre-approval letter, to go through and complete a home loan application. I prefer to do this in person or over the phone, but you can also do this easily on a home mortgage app. You will also be asked by your lender to provide specific documentation. On the back of all of my business cards, I have a list of all the documentation I need. It includes things as your photo ID, your most recent 30-day pay stub, your most recent 2 years W-2s, your most recent tax returns, your most recent 2 months bank statements, and other items as needed for your specific situation. Then, once your loan officer decides what you're pre-approved for, they give you options for down payment, loan options, and we'll go through all of those in this presentation. Then, once you have your pre-approval letter, you take that to your real estate agent, and they create an inquiry for homes that you are approved to purchase. So they're going to see what's available essentially in your price range. They're going to ask you, where do you want to live? And when are you ready to start living? So let's get down to the basics of home ownership. Here are the factors of the pre-approval: your credit history, your employment status, your qualifying income, your existing debts, and the down payment. How much do you really want to invest in this home? What is the importance of your credit history anyway? What determines your credit score? Good questions. 20% of it is made up of your new and the type of credit that you have. Then 15% is the length of credit history do you have. Have you had your credit cards a month, or have you had them for 10 years or more? 30% of it is all about how much do you owe on your credit cards. Do you keep a balance every month, or do you pay them down to zero balance every month? And then 35% is your payment history. Do you make your payments on time? That's what the creditors are looking for here. So here are some important notes with your credit score. Like I mentioned before, do you have a history of making your payments on time? Your lender looks at this, and if yes, it means that you're more likely to make your mortgage payment on time. And then your overall FICO score. Your FICO score can be 400 all the way up to 800 or more. That's what your lender is going to be looking for, and that will determine which mortgage you actually qualify for. And then your credit score can also determine your down payment, the amount of money you owe, and the interest ultimately that you pay on your mortgage. You can obtain a copy of your credit report for free at annualcreditreport.com. I do recommend doing this because it gives you a heads up of what the lender will see once you want to get pre-approved for a home loan. Okay, how much do I need for a down payment? Today's flexible mortgage programs make down payment less of a challenge for folks. You may be able to buy a home with very little or no down payment at all. Some home buyers are also eligible for down payment assistance. However, be prepared for closing costs. You have your down payment to purchase a home, but you also have closing costs. What your closing costs include are title fees, appraisal fees, home inspection fees, attorney fees, recording fees, homeowner's insurance, and prepaid taxes. Be prepared for those, and your lender will walk you through all of those costs in your loan estimate. Also, be clear with your loan officer of exactly how much you want to invest in a new home. If you have $50,000 you want to put as your down payment, does that also include your closing costs? Or do you want to do it separately? Maybe you have $50,000 for your down payment, and you have an extra for your closing costs, make sure you have that conversation as well. So how much can I afford? So lenders are going to use your credit history to determine your debt to income ratio to determine the loan amount that you qualify for. Your debt to income is the anticipated total housing costs plus your existing debt payments divided by your gross annual income. Certain loan programs offer different guidelines and an expanded debt to income ratio for qualifying. Also, they offer different down payment requirements and specific loan amounts. We will go into those details in just a little bit. So, like I said before, it's very important to get pre-approved so that you know how much you can afford. What does my mortgage payment include? Your mortgage payment includes 4 amounts known as PITI. P stands for your principal on your loan amount. I stands for the interest you pay on your loan amount. T stands for your taxes that you pay. And insurance is your homeowner's insurance. Typically, your loan servicer will include your taxes and insurance in your mortgage payment. That's called an escrow. So which loan type is right for you? Conventional or an unconventional loan? And we'll go through the details so that you understand the difference. Conventional loans are home loans that are not insured by the government. These loans are backed by Fannie and Freddie Mac. They have lower debt to income ratios and higher credit scores. Typically 680 plus are preferred. The types of conventional loans include conforming. What this is in 2023, your baseline loan limit in the US, so nationally, it will be $726,200. That's the maximum baseline loan. There are high cost areas in the US, like we know, and those areas start at $1,089,300. If you're in a conforming loan limit area of $726,200, if you need a loan above that limit, it will put you into a jumbo category. Typically, these loans are fixed rate, anywhere between 10, 20 to 30 years. They're amortized over that period, and the last payment you make is the end of your mortgage. Adjustable rate mortgages, however, have a fixed rate for shorter periods, but they offer the benefit of a decreased interest rate during those shorter periods. Those periods can last between 5, 7 to 10 years. Unconventional home loans are loans that are insured by the federal government. These are government and bond loans, and these loans include FHA, VA, USDA, and state bond programs. The benefits of a VA home loan are intended for former and current military members. So you have to obtain a certificate of eligibility for your VA home loan benefits in order to qualify. But reach out to an experienced lender and they can walk you through those steps. The great thing about these loans is there's no down payment, no private mortgage insurance, and no funding fee if a veteran is qualified for that. Normally it's disabled vets. So what do I mean by no private mortgage insurance? So typically for any loan with less than 20% down or an FHA, USDA, or state bond program, you will have an additional payment of a private mortgage insurance to obtain those loans. And we'll go into details of that later. So which loan is right for me? The loan programs we discussed today offer a range of financing and down payment options. Interest rate is only one component in obtaining the ideal mortgage for your situation. By working with an experienced mortgage professional, you can select the loan that is suitable for you. So you're going to want to know your interest rate your total monthly payment, your type of mortgage matters, right? So is it a conventional home loan? Is it an FHA home loan, USDA, or VA? An experienced lender will walk you through all of your options. Mainly what you're going to want to focus on is your down payment required, your private mortgage insurance if required. Remember, that's typically any loan with less than 20% down, and what monthly payment are you comfortable making? Okay, so now let's jump into the home buying process. This is where all the fun begins. So there are 6 steps typically to buying a home. Step 1, this is a recap of what we reviewed. Complete a loan application with your lender. Provide all the necessary documentation and get a pre-approval letter so you can submit it to your realtor right away to begin searching for your new home. Step 2, review the pre-approval with your realtor so they know the maximum purchase price you are qualified for. So if you're only approved for a $500,000 purchase price, try not to look at anything above that, right? And then formulate a plan to see those homes that are within your budget. Step 3, start shopping for homes. Stay focused and don't get discouraged. It can be very competitive, especially these days, but don't get discouraged. Just stay the course, keep in touch with your lender and your realtor, and also if anything needs to be updated, notify your lender immediately. We also would recommend that you don't make any new purchases. I know everybody loves an F-150, but at this time, not a good idea because it'll impact your credit and it'll also impact your debt to income ratio because you have ultimately a new debt. All right, now that you've found your home, now what do? You've found your dream home. You're going to work with your lenders to submit an offer. If you need anything adjusted on your pre-approval letter, such as a decrease in purchase price, reach out to your lender and they will update your pre-approval letter. Then you submit your offer with your earnest money. This is just letting the seller know that you are a serious buyer and you're going to put down a down payment on that house, typically about 1% of the purchase price. Once you're under contract, you're going to order your appraisal and your home inspection. Your lender will ask for any updated or additional documentation to get your loan approved. Then your loan is reviewed by an underwriter for final approval. Once you receive your final approval, you're going to reach out to your realtor to schedule your actual closing on your new home. You're going to review your final closing disclosure with your lender. That goes over all the final details of how much money you'll need for closing, what your down payment will be, and what your final monthly payment will be, your principal, interest, taxes, and insurance, and private mortgage insurance, if applicable. Then you attend your closing, you sign all of your documents, and you get the keys to your brand new home. Congratulations, you're a homeowner. All right, here, talk to your lender about the following key points we have discovered. Owning versus renting. Every lender will be able to show you the benefits of owning your home or renting your home in your specific area. Ask for those details. The pre-approval process. We've gone over what it includes. Review their pre-approval process. Your credit report. Obtain your credit report at annualcreditreport.com. That way you're ahead of the game when you reach out to your lender. Review down payment options with your lender. Let them know what you're comfortable investing in your new home. Next, review your closing costs. All the loan programs you're qualified for. Your mortgage payment details. Seriously, how much a month am I going to be spending? How much of interest will I be paying over the life of the loan? Those are the details you'll want to know. And then review the 6 steps of the home buying process. So we've come to an end in our conversation here today. This class is finally over, but you have just begun your home ownership journey. My name is Rebecca Milliken. I work with Bank of England Mortgage. We are licensed in all 50 states, so we can help you purchase a home from Maui all the way to Maine. If you would like to schedule a consultation with me, I'd be happy to do so. My direct number is 720-280-6013. I look forward to speaking to you real soon. Thank you so much for listening.